Sorry, there's no sound.
Oh dear, sorry. Okay. I was unmuted on this one. Oh shucks. Okay. Let me start again then. Hello and welcome once again to our Monday class. So we're going to just look at various setups on how the market moves. But today in particular, we're going to be looking at how to develop your own trade system. And so if you take your younger ones to an arcade where you find these slot machines. So we want to look at what are the possibilities when you give them some money and then they put it in the slot machine. Right. Once they put it in the slot machine, what do they expect? Or if you are the one playing it and you put your maybe 1 cent or 1 pence or 1 naira or whatever it is, once you put it in, what is your expectation? Are you expecting that you will get your 777 right away? Or you expect that is a probability process, is a probability game that you may have to put in a number of them first, a series of them first, a series of money. You need to put in some money, different sets before you get your 777. For all we know, you could put in the first one and you get you hit the jackpot. Or you put in several before you hit the jackpot, right? The same way this happens in your trading, right? So the framework we're going to use is the fact that you need a trade plan first. Then you need your strategy. Now, in your strategy, once you have your strategy, where is my pencil? Okay. So once you have your strategy, when you place a trade, when it gives you a setup, okay, so imagine that setup is you putting in your money into the slot machine. So once you put in the first one, there's every possibility that first one will be a winner. There's also every possibility that first one could be a loss. But you are not disturbed by that because you know that is over a series of trades that you will make this, that you hit the jackpot. It is over a series of trades. It is not over just one particular trade. So you have to monitor your psychology, your mindset. What is your mind telling you when you place a trade on this particular trade? Let's say trade number 2. And on this trade number 2, you decide to, you're not looking at your risk management. So instead of using just one lot, or well, let's say 0.01 lot, right? You decide to use one standard lot. You have over leveraged, and then even your entry. So let's say price is moving lower lows, lower highs like that. You're not even waiting for price to pull back for you to enter. You have entered maybe at the very lows here. Okay, and then you decide to give it a very tight stop loss. So there's all shades of possible wrong actions that you're already taking. Why? Because one, you've over leveraged and you are expecting that this one particular trade, this trade number 2, will be the one that will be the jackpot. Meanwhile, when you play the jackpots, when you play the slots machines, you are totally okay with putting in as many of the money you have with you. waiting for the jackpot. And even if when you spend all your money and you don't hit the jackpot, you're okay with it because you have accepted that you can hit the jackpot or you may not hit the jackpot, right? That is why they tell you when you are trading, only trade with funds that you can afford to lose. So do not go into trading with the mindset that once I start today, I'm going to make heavy wins. I'm going to hit the jackpot. It's over a series of trades. Okay, right. So let's continue now to looking at what we need to develop our trade strategy. So we're just concentrating on this first one today, trade strategy. Okay, so let's go to the charts and just look at a setup. Oh, okay, let me stop sharing first. And then I'll need to reshare. Okay, just give me 1 sec. Okay, can you see my charts? Okay, beautiful. So look at these charts. This is the pound yen chart. No, sorry, euro yen is euro yen chart. Okay. Now, let me expand this a bit. So to develop a strategy, the way I look at it is that if you don't pick, if you're not confident enough to just pick anyone from the internet, you open your chart yourself and just look at it and ask yourself some basic questions. Okay, so look at from the lows here all the way to the highs here. Right? Is that price, is it moving up? Do we all agree that it's moving up? Just type a 1 if you think it's moving up. Just where I highlighted now. Is it moving up? Do you agree that it's moving up? Just type a 1 in the chat box. Let's see. Or if you have a different idea. I'm not seeing our responses though. Or is it lagging network that's making me not see it? Is price moving up between this point A here and point B? Okay. Okay, so let's look at this. Now, price is moving up. We've all agreed price is moving up. Now, so if we now ask ourselves, where is the best place to enter for a buy? If we agree that it's moving up, where is the best place to enter a buy? So between these lows here and these highs here, it will obviously be somewhere around here. Okay, that will be the best place to enter. Okay, so you say to yourself, can you see any kind of pattern at these lows here that will prompt you to say that, okay, if I see this pattern happen again, then that is a likely pattern for me to follow that tells me that price is likely to change direction. So remember, before this level here, price was coming down, right? So we have one of my the nice setups that I like to see. This is a kangaroo tail right here. So that is pattern number 1. The second one is the engulfing candle. So once I see a kangaroo tail, or I see a engulfing candle, or I see a doji, then I know that there's a possibility that price is going to change direction, right? So if I take that now, this combination, and say, I'm going to use this. So let's look at the chart again to see where else can we see either kangaroo tails or engulfing candles or dojis that gives us a reversal pattern. Look at this here. It gives us a nice kangaroo tail. And what does price do? It goes up. Look at this one here. Is a doji spinning top. Then the next candle after it is a bullish engulfing candle. And what happens after that? Price goes up, right? Look at this combination here. Though you have a nice bearish candle, however, price then came all the way up and broke this level here. So if you look at, try to imagine it as one candle. That's these bullish candles here. If you imagine it as one candle, then it's a bullish engulfing candle, which engulfs this last candle here, right? And what happens after that? Price goes up. Okay, price goes up. So that tells us that we've seen it here happen. We've seen it happen here. This is one. We've seen it happen here. That's two. We've seen it happen here. That's three. We've seen it happen here. That's four. So you can see price happening over and over again. That's that price pattern. Engulfing candle, kangaroo tails, or spinning tops or dojis. So it's a repeatable process. So what do you do with that? Once you've taken a pattern or taken a set of indicators, maybe a moving average or whatever it is, once you see that is a repeatable process, it repeats itself, all you need to do is to then begin to apply it wherever you see the setup. And that's why I started with that slot machine earlier, that you just continue to take your trades. It doesn't matter whether you hit the jackpot or not. Just continue to take the trades. So here now, what we have done is first, we looked at the chart and said to ourselves, where is the best place to enter for a buy if this price was going to go up? So remember, before all these ones, we didn't know what was going to happen, but we can see that we have an engulfing candle, we have a kangaroo tail. So that tells us it's likely to go up. Or rather, it has a potential to change direction since it was coming down. And then, of course, it did go up. Somewhere in the middle there, it had a bit of, would I say, it had an engulfing candle there, right? So you'll have been stopped out on this one, on this engulfing candle. So you take every trade setup that you get, irrespective of what happens. So you just take it. So you take this one here, you get stopped out on this one, but then it just goes on, and you make your profit there. So once it gets here again, you see a break of structure there, right? And then you just follow it down that way. And then you just see another engulfing candle there, and it goes up with you. You see a bearish engulfing candle, right? You take your trade, put your stop loss there, but it stops you out, right? That stops you out, but it then forms another engulfing candle in the opposite direction. And then you enter your trade and you go along with it, right? So it's going to happen over a series of trades. That is where you get your jackpot. So it doesn't matter what strategy you use. What is more important is that you stick to that process. So just like the slot machine, when you get to the slot machine, you just continue to put it in. When you put in the first dollar, if it gives you the jackpot, great. If it doesn't give you the jackpot, you put in another one. You put in another one until you're ready to say, okay, I'm no longer going to put in any money in this business, in the slot machine. The same way for this too, right? You just keep trading your edge, because you can see that over a series of trades, your edge gives you a positive outcome. So most of the time, you will see that when you decide that, okay, this is the trade system I'm going to use, you will be tested. Okay, the market will test you. And that is where your trader psychology comes in, where you can say to yourself that, okay, it doesn't matter if I get a stop out, I'll just continue trading my process. So earlier today, I was talking with our team in the Skyvision Academy. And I said, you know, when you have, let's say 10 trades, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In this set of 10 trades here, right, price, your trade setups, so your engulfing candle. So let's say you're using engulfing candles. Now, once you get to engulfing candle, all that setup is telling you is that it has a potential to give you the jackpot. So you take trade 1 and then it's a win. You take trade 2, but it's a loss. You take trade 3, let's say it's a win. And then you take trade 4, let's say it's a win as well. Then trade 5, let's say it's a loss. Trade 6 is a loss. Trade 7, let's say a win. Trade 8, let's say a loss. Trade 9, let's say a win. And trade 10, let's say a loss. So you have a win, loss, win, win, loss, loss, win, loss, win, loss. Right? And then when you take another set of 10 trades, the process, the outcome of those trades would be totally different from what you have here. You could get a loss, loss, then win, 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 win. Right? You can just have 2 losses and all the remaining are winners. Or you have the converse. Okay, so this then tells you that, your trading process has a random outcome. Your trading process gives you a random outcome. Right? You get a random outcome. So do not unnecessarily over leverage on just one particular trade. You have to take a series of trades. So you have to always remember that I'm trading over a series of trades. That is where I get my jackpots. So if you like, you can use a moving average. Let me see if I have a moving average somewhere here. Moving average. Okay. So if I put a moving average on this, look at now. It gives you a different shape. So I say to myself that if I get a candle close above the moving average, I'm going to take a buy. If I get a candle close below the moving average, I'll take a sell. And you see, it works out here. And then it works out here. This one goes up and down. And then eventually it goes up. This one comes down a bit. But then it gets topped out. This one gets topped out as well. So you do get some profitable trades. So it is possible to just use moving averages. and you can get your trading strategy from there. All you need to do is to fine-tune it, particularly in areas where market is moving sideways. Right? So no matter the trade strategy you decide to use, it will work. But you need to have that confidence in it. And then just continue to apply it. Okay? So do we have any questions? That's about all that we have for today. It's just to reiterate the fact that we can use any system, but we need to be consistent with that system, be consistent with that process. Do you have any questions? Billionaire Confidence, you want to ask a question? Are you able to talk? I can see your mic is unmuted.
Can you hear me?
Yes, I can hear you now.
All right. Good evening, sir.
Good evening.
Yeah. I'm happy. At least thank God I was able to join today's little webinar. I've been missing it because of work and all. But I'm really interested in this trading thing.
Okay.
The question is, do you have a signal room? Let's see.
No, I have a coaching academy.
Okay, a coaching academy.
And then in the coaching academy, we then show people how they can develop the signals for themselves. And they won't have to depend on somebody else to give them a signal.
Okay. How many months is it, the training, and is it a physical class or what?
It's not a physical class, it's all 9. And it's roughly about 4 months.
Okay, 4 months training.
Yes, so it takes you through right from the beginner levels to the advanced levels.
Okay, I thought you have
you
a
can
signal.
take a prop firm account and be confident to win, to pass those challenges.
And you say it's not physical.
It's online. So we have so the way the classes are structured, you have a series of pre-recorded videos that you go through, and then you have live classes as well. Because we have different people, we have people from different countries in the class. So we're not able to have physical classes as at now, except we begin to do for different regions. But at the moment, it's all online.
Are you in Lagos?
Yes.
Okay. All right, no problem. How much is this thing now?
I'll send you the link. Let me put the link in the. I'll put it in the platform.
Okay.
The course and what it covers. So if you're interested in that, you can then take it up.
All right, no problem then.
Lovely, thank you.
All right, thank you very much.
Thank you, you're welcome. Okay, so that's all we have for today. Just to reiterate again, that we need to think, when we are trading, we need to think about it, that we're not taking just one trade to hit our jackpots, but we want to take a series of trades. Next time we'll look at risk management, we'll look at trader psychology as well. Okay, we'll look at those other aspects as well, because they are very important as well, particularly your risk management. Okay, so thank you so very much.